One move just flips silver on its head. Stacking days are over. Prices are rising, yes, but behind the scenes, something much deeper is unfolding. Check this out. This is from silverseek.com, and they're showing the COMEX warehouse system. That's the official exchange where most silver contracts are settled, COMEX. It's seeing registered silver supplies drop fast. Just as of this month, there's only about 35.9 million ounces of registered silver left. That's the silver that actually delivers to investors who want the real thing, not just paper promises. And here's the kicker. There are more than 1.2 billion ounces of paper contracts in open interest right now. So it doesn't equal even closely to adding up. That's over 33 times more than the amount of silver available for delivery. 33. So you got investors and miners and traders and ETFs and industrial users are circling around the same small pile of silver, and the pile is shrinking. We got pressure from solar, EV demand, that industrial demand, investor FOMO, and most of all, a deeply broken futures market. And it's all converging right now. Look at this. This is from DataTrack. Check out this chart. Now, total COMEX silver might sound large, about 497 million ounces, but it's deceptive. Most of that silver is undeliverable. It's in the eligible category, which means it belongs to someone else and it can't be touched unless they choose to sell it. So what matters is registered silver. That's the stuff you can actually claim if you take delivery. And that number, again, it's now under 36 million ounces, one of the lowest levels in over a decade. If any industrial user or big investor takes delivery, that number could fall even further, literally overnight. Here, look, you can see this is bullion by post. And they're showing the increase in premiums for metals. It means longer wait times. It means in many cases, no stock at all. And if you tried to buy low premium silver rounds recently, you've noticed the inventory is drying up. Premiums on generics, they're climbing back over $3. That's for generics. Some even up to $5. Popular sovereign coins, you got the American Silver Eagles, Maples. They're often selling quick. So even if spot price is not skyrocketing, real world stacking is getting more expensive and more frustrating by the day. Big takeaway is this. COMEX is not broken, but it certainly is cracking. There's simply not enough real silver to back those paper contracts. And everybody's starting to notice. When that imbalance breaks and someone can't get delivery, we could see either paper unwind, a massive short squeeze. A lot of people are calling for that. We could see a shift to true physical only pricing. And that makes one thing clear. Days of grabbing cheap rounds and low premiums, those are fading. And smart stackers are acting now. They're not waiting for later.